Bitcoin has been chopping sideways, holding 87K. I'm going to do a top-down analysis today, starting from the 12-month chart all the way down. And there's certain things in the higher time frames that show that we might still have a chance to get above 97K. Let's take a look at those things right now. Welcome back to Flex Candle, where we read the candles and flex the moves. Right now, it's about 4:50 p.m. Eastern Time, and the price of Bitcoin is currently at 87,657. Now, we're going to start off here with the 12-month chart. And as you can see here, we currently have a red candle. This candle closes in 4 days and 3 hours. If we close like this would technically mean we made no gains this year. We're currently minus 6.30% for the year. This makes me think that maybe we could rally up just to get above this prior year candle. And all we would really have to do would be get above 95K. We could get above 95K. Technically, we close the year bullish. So we're not too far away. This is something that could definitely happen. It's not a big move, but just to get a green candle in there, it's a possibility. Now, we take a look at the 6-month chart. This closes in 4 days and 3 hours. We have a big red engulfing candle. We can see a little bit of the RSI here. It's already topping and starting to roll over. If we close like this, I would think that we're going to get more downside. 3-month chart, we see that the RSI is toppy. It's rolling over. We see the stochastics RSI here is toppy. Unless we drag here for a while, this could start rolling over. We are also away from the 21 moving average. Since we're away from the 21 moving average, we're either going to come down and touch it, or we're going to go sideways and wait for this 21 moving average to interact with price range before either going up or possibly falling down. That's currently at 53,557. 2-month chart is not looking good. RSI is rolling over. Stochastics RSI, as you can see, is like double topped here. We're starting to roll over. Gigantic big red engulfing candle as well. This is not looking good. We're also far away from the 21 moving average. If this closes like this, I would expect possibly more downside. On the monthly chart here, you can see that the stochastics still haven't reset. This candle also closes in 4 days and 3 hours. Now, what I'm seeing here is some hidden bullish divergence, which could make us continue going up. If you see from this candle to this candle, it's not straight. It's kind of sloping up, but the RSI is sloping down. That's hidden bullish divergence. But again, this candle has to close like this in the next 4 days and 3 hours. If we lose this 21 moving average at 87,576, that negates that bullish divergence, and then we're probably going to be headed down towards this 50 moving average at 56,183. If we could hold above this 21 moving average, this hidden bullish divergence could play out, and we might go up next month. That doesn't mean we're going to break all-time highs, but we have a chance to go up higher, and maybe we could see that 97K, that 100K Bitcoin again. The 3-week chart also closes tomorrow in 1 day and 3 hours, and this is not looking good. If we close below this 21 moving average, which we probably would since it's at 100,061, we probably are going to start heading towards this 50 moving average. That's at 68,625. That will kind of correlate with the bear flag I have on the daily chart. That takes us down to about 70K. Stochastics here still have a lot more time before we start resetting. On the 2-week chart, this closes in 8 days and 3 hours, so we have some time. The stochastics are starting to reset, but again, we could drag here for a while, similarly to how we did here. And 2 or 3 more candles sideways will continue making a bear flag, which would then drop us down possibly to this 80 moving average at 65K. So that's not looking too good. The weekly chart, stochastics are dragging here. This looks like it wants to roll over. This definitely kind of looks like a bear flag. And again, we could still drag here for a while. We're holding the support of this 100 moving average at 85,569. But if we start closing candles underneath this 100 moving average and cannot get back above, then our next stop is going to be this 200 moving average, which is at 56,795. Now, usually in the bear markets, once we lose this 50 moving average, we enter the bear market. We usually go sideways for a while, come down, and then we eventually come up to test this 50 moving average again. That's currently at 101,849. I've been telling you guys for weeks in my other episodes that I don't think we're going to go and touch and retest this 50 moving average until it goes below 100K. And if we take a look at the last bull market, when we lost that 50 moving average over here, it took us about 14 weekly candles before we came back up and tested the 50 moving average before ultimately falling into a bigger bear market. If we go by that history, right now we only have about 7 candles. So there's about 7 candles left before we go and touch this 50 moving average. So that's why I'm thinking we could possibly go sideways a little bit longer, then go up and test it. But by that time, the 50 moving average is probably going to be below 100K. Now, the 5-day chart, stochastics look like they want to roll over. This is looking more and more to me like a bear flag every day. We already lost the 100 moving average here. Next line of defense is this 200 moving average at 69,812. 3-day chart, stochastics kind of look like they're starting to top out here. Maybe we have a chance to continue going up, but we have not been able to close above this 200 moving average. This is bearish. Unless we could get back above this 200 moving average on the 3-day chart, I would expect us to continue having more downside. This candle closes in the next 2 days and 3 hours. We have a shot for it, but the 200 moving average is currently at 89,590, and that's where we currently have a lot of resistance. We've been able to get to 89K a couple times, but we keep on getting rejected from there. The 2-day chart, I've talked about a possible double bottom. This gives us the hope that if this does play out, the measured move to this takes us to about this 200 moving average, which is currently at 101,357. But in order for that to happen, we have to close a 2-day candle above this 21 moving average. Again, that's at $89,101. We have resistance there. We keep on getting rejected from 89K. The stochastics are not doing us any favor. As you can see, we're about to roll over here. Hopefully we could drag here for a little bit, maybe even come back up. We get that move and then we could eventually roll over. But this is the most important thing, is to get back above that 21 moving average on the 2-day chart. The daily chart, the stochastics could go either way here. We could roll over or we could make it back up. But like I've been telling you guys since December 11th, we have not been able to get back above this 21 moving average. If we cannot get back above this, I would expect these patterns to play out, which is this head and shoulder pattern, which is right now on the cusp of the neckline. I'm expecting this to roll over, and we already broke from this bear flag here. This bear flag started breaking down at 91K or so, and we already went down as far as 84K. So we got a lot of the measured move, but the full potential of this is going to take us to about 70K. So that's still in the works here. We cannot get above this 21 moving average, then that has the probability of playing out. The 22-hour chart looks like it wants to reset here, but again, if we cannot get above this 21 moving average, that doesn't really mean much to me. 8-hour chart, we're below the 21 moving average as well. This could continue going up, but in order for me to feel bullish, we would have to get above this wick here. This wick is at $90,600. We haven't even been able to get above 90K yet, so this looks like it's far away from us, but let's see what ends up happening. On the 4-hour chart, this is where I have a possible head and shoulder pattern. Left shoulder, head, and we just made the right shoulder. This measured move takes us down to about 84,700, I would say. We've been going sideways here for a while. The stochastics are low. Let's see what ends up happening. In order to negate this, I would say we would have to get above this 200 moving average with strength. That's currently at 89,318. Again, that's where we have the resistance. If we can't do that, I could see us rolling over. The thing is that we are in holiday seasons. A lot of the big investors, Wall Street, they're all on vacation. So as you can see, there's just been a lot of sideways actions. So a lot of the patterns might not play out on time. It might take a lot longer for it to happen because there's just not that much volume at the moment. On the 1-hour chart, we're getting toppy with the stochastics here. We are above the 21 moving average. What we really have to do is get above this 200 moving average at 88,000. This is also looking to me like some type of head and shoulder, a complex head and shoulder. Left shoulder, head, and then we're kind of dragging here with this right shoulder. I would say if we can't get above this 200 moving average, this is possibly going to roll over and take us down to about that 84K, 84,500 level. Now, on the 15-minute chart, this tells us the whole story here. Just look at this sideways action that's been happening. This just looks like a very elongated bear flag here. If we cannot get above this 200 moving average, I would expect us to roll over. We are toppy here on the stochastics RSI, so we could always drag here, but it also shows that we could possibly also roll over. So right now, guys, I'm just seeing us going sideways. There's still potential that we could make it above 95K, but the probability is for us to possibly roll over. I'm hoping for some type of a little miracle where maybe we could still end this year in a positive note, still be positive, maybe make it, like I said, to 95, 97, even if we ultimately roll over. But right now, the probability does look in the favor of more bearishness and possibly coming back down to at least 84K. All right, guys, so that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, subscribe. And if you have a stock or crypto you want me to go over, drop it in the comment section. This is Flex Candle, where we read the candles and flex the moves. Catch you on the next chart.